Hey everybody, Brian Shannon here from alphatrends.net. It's Friday the 13th of March 2015. Let's take a look at this market. We had some volatility this week. The S&P 500 lost 0.75%, Nasdaq close to 2%, and the Russell 2000 was up 1%, so pretty mixed bag there. The semiconductors were weak, down 1.3%. Financials gained a little, and oil got hit, as it should, in a downtrend. We'll talk about that again, because it did what we were expecting it to do. And the bonds were up a little bit here this week, up actually pretty nicely, up 2.6%, as was the US dollar. So let's take a look at the action here on the charts, and we're going to start here on the S&P 500 with a 30-minute chart, meaning that each one of these candles, I'm sorry, it's a 65-minute chart, each one of these candles represents 65 minutes worth of data. And it seems like a funny number maybe to some people, but 65 minutes are equally divisible into the 390 minutes that the market is open each day. So it gives us each one of these candles equal to each other. There's 6 of them per day, versus if we were to look at 60-minute candles, you would have one candle being 30 minutes and the other 6 ones being 60 minutes. So it allows us to compare apples to apples. Anyways, this is the year-to-date price action for the S&P 500. So you can see our low down here up to the high, and when we take a look at a retracement of that, we broke below the 38.2% retracement, came down to the 50% retracement, and this level, the 50% retracement level, is also where we see this purple line, which is the volume weighted average price year to date. So those two numbers are coming together at approximately the same place, as is the 100-day moving average. So as I've been pointing out on StockTwits, Twitter, and in my blog this week, that this is an area of interest. That what we do is we look at a potential level of support like we are at, and we say, okay, is there evidence that the buyers are gaining control? And as we came into this week, we were looking at it as guilty till proven innocent, because it was in a intermediate term downtrend rather. And that intermediate term downtrend, we were looking for a bounce perhaps up to 209.25 to 209.50 before it turned lower. Instead, we turned up a little bit on Monday, gapped lower. People got excited about that rally on Thursday, but as I always say, don't trust the rallies for more than a day trade if we have a declining 5-day moving average. And we did see failure of that obviously here today. We got a little bit of strength late in the day, so it seems as though this is definitely a good level of interest, an area of interest that we want to be aware that the market could potentially turn back higher next week. Now, in order for us to really regain control from the intermediate term, we're going to need to see that this is going to be our little bit of a band of resistance. What I'd really like to see is maybe even flush out just slightly below, let that 5-day moving average flatten out about Tuesday of next week, and then to break above that 207 level. If that were to happen, then I think we could get a little bit better bounce, perhaps back up towards about that 209 level. But we still have to be very suspicious of this market due to the fact that it's broken some pretty good levels of prior support, and those prior support levels, of course, have the opportunity, the potential to become resistance. Now, for the Nasdaq, obviously, we were talking about this 108 level, and 108 as being the potential area of resistance, 108 to 108.25. We'd mentioned that, getting up towards that, it seems like a likely area where this prior support would in fact hold as resistance, and it did. So we had that happen. The market continues lower. Right now, we're down close to a 50% retracement of the year-to-date range. And when we take a look at, what's a potential area of support, we've got this big band of prior resistance in here, basically between 103.75, where we see the year-to-date volume-weighted average price, and about 104.5. This is where I would like to see the Nasdaq continue down into this area. You can see, of course, that this 5-day moving average has a much steeper downward slope to it, and we made a lower low in the Nasdaq today. So obviously the Nasdaq is relatively weaker, not only based on the percentage numbers for the week, but where it is in relation to important levels such as the year-to-date volume-weighted average price, Fibonacci. We've also got the 50-day moving average still just below us. So it seems as though it would be, the best thing for the Nasdaq, I think, next week would be for it to continue down towards about 104, then start to find some support and maybe be able to continue to move higher. But with all of these markets below declining 5-day moving averages, it simply doesn't make sense to be a buyer. Now, the interesting thing here is, again, that the Russell 2000 is very close to its all-time high, and that it is back above the 5-day moving average. So what we saw in here this week was that the prior support did act as resistance initially, and then we got back up above this little band which had been supporting it, and that turned into which was briefly resistance, turned back to support today. So this market is clearly the stronger market, and I think that next week, if we can hold above 121, keep your eye on the Russell 2000 as a potential market leader to be able to continue to lead the market higher. That is, it's above a rising 5-day moving average. Yesterday it got a little bit ahead of itself. It pulled all the way back down to the 5-day moving average. So now this 121 is going to be where we want to see this market hold next week. We've got a little bit of what should be a band of support between 121 and 121 and a quarter. If it breaks below there, we become a lot more cautious. For now, it's a little bit more neutral in the Russell 2000, but looks like it has the best chance of being able to turn positive. Semiconductors remain a mess. They are, of course, they're trying to find support at that 50-day moving average. And we look at the year-to-date volume-weighted average price. That's exactly where it found support yesterday. Not a coincidence, I think, because there's a lot of programs that are based around that. Anyways, we're looking at a 30-minute time frame. We do still have a pattern of lower highs and lower lows. We broke that trend line, so that's nice to see as far as a sign of maybe starting to show some stability here at an important level on the chart. But in order for this market to become more neutral to positive, we're going to need to see it break at least back above the 56 to 56 and a quarter level. Ideally, we kind of run up towards that level, pull back, create a higher low at a 5-day moving average, and then move higher. But even still, if it's to do that, be aware that these prior levels of support are likely to offer resistance as well. So it's not likely to be that if this market turns higher, it's just going to be a rip snorting bull market back up. The financials did survive the important level for this week. That is the 2410 to 2420 level. That's the level we had on our list for this week. It broke below it, but then obviously we got back above, and this shows why when you have a longer term bull market on the weekly time frame, it's still very difficult to make money on the short side by staying with a short position for very long. So this level was once again going to be important next week, 2410 to 2420. If we can hold above that, then this market is looking good, and more neutral rather, I should say, and it's going to need for continued upside, to break beyond these highs where we've seen resistance this year. So kind of neutral overall on the financials. Now for Apple, we saw that this stock did continue to lose ground. That shouldn't surprise people. And again, it's the direction of the 5-day moving average. When the direction of the 5-day moving average is lower, we look at rally attempts as guilty till proven innocent, that we don't look at, they get back above the 5-day moving average for a short period of time, but the 5-day moving average was declining, so we looked at that as, a reason to be suspicious, and we have this level that's been acting as resistance. So for next week, to get it back to neutral, it's going to have to get above 126 to 126 and a quarter. For it to become positive, we're going to want it to see it get back above 129 and a half to 130. For now, there is zero advantage to being a buyer of Apple in this area. The volume weighted average price year to date is down at 120. That's also approximately where we saw some prior resistance. And if we take a look at the retracements in here of the yearly, the range that we've seen year to date, that's approximately a 50-day movie, a 50% retracement of that entire range. And we've got the 50-day moving average down in this 120 area as well. So 120, if it gets down towards 120, I would be looking for the signs that that Apple is starting to find support. But and of course, it's also this this prior peak here. So 120 is clearly a very important level. Let's see if it gets down there next week before this 5-day moving average starts to flatten out and turn higher. But it still remains guilty till proven innocent. Now let's talk about oil, because this was one I'm actually kind of proud of, because you heard all the people talking about how oil's finding a bottom and that sort of thing, and I pointed out not only in last week's video but also in on Twitter on Tuesday that we've got a 50-day moving average that's still declining, and that rallies with a 50-day moving average declining typically do not hold rather. And Yeah, I was saying that if we broke this band of support, it looked very likely we would come down and test the lows near 44 to 45, and that's exactly what happened. So, looking at the weakness in oil, it should not surprise at all. The more times that support was tested, it did in fact give way, and the consolidations within an overall downtrend are going to typically resolve themselves back to the direction of the primary trend, which in the case of oil remains lower. Will it find support in here? We simply don't know. This is the potential level down near 44 that we have for support, but oil remains in a downtrend. It's guilty till proven innocent. Anyone purchasing down here is, in my opinion, getting what they deserve for fighting the trend. Now, let's take a look at some other things, such as the bonds, which this week the bonds did gain a little bit of ground. They gained 2.6%, so that's more than a little bit of ground. But you can see here that this prior support, which was broken, trapped some short sellers. It appears in there for a bit. Gapped back up and back above that 5-day moving average. You simply cannot be short while we're above a flat to rising 5-day moving average. So on the daily time frame, it seems as though the bonds are trying to find some support here. The US dollar had a very strong week. So again, there's no sign, there's no evidence. We say this over and over again. There's no evidence of a top or a double top or anything. The market trend and momentum remain higher. We're above a rising 5-day moving average. As long as, I think, for next week we remain above 26.15, you've got to look at this market as innocent till proven guilty on the intermediate term, and that higher prices still remain likely in there. The biotechs did hold above that 340 to 341 level that we were talking about. So, this remains the strong group. They're holding up right near those all-time highs, and you can look at it and say it's extended or whatever you want, but we had a gain of 0.87% this week, and we're up close to 14% for biotechs this year. This is where the strength remains. The only thing that I would say is that if we get back below that, I'd say probably 339 to 340. If it gets back below there, then we'll be below a 5-day moving average, which will start to decline, and perhaps that would be the reason that we start to see a little bit deeper pullback. But as far as a short goes, I mean, it's got such strong momentum. It's really difficult to look at it and say that would in fact make a good short candidate. Alibaba, well, it's a piece of garbage stock, that we know, and it did lose further ground this week. So just back to doing what it does best, which is to erase people's equity. We are down close to the all-time lows, I guess, just under $80 a share, or just near $80 a share. It's still below a declining 5-day moving average. Last week we said that if it could get back above 86 to 87, that maybe we get a little bit further bounce, but obviously that's not the case. For next week, I'd say maybe back above 83 to 83.50 we get a little bit of a bounce, but again, why would you want to try to attempt to find the low in a piece of garbage stock, which is trading closer to, much closer to the lows than the highs, and the momentum still remains lower in there. The momentum's still lower in GoPro as well. GoPro is a piece of garbage. You can say that maybe it gained, is probably about break even for the week, but it's still in a primary downtrend. There's no evidence that a bottom is being made. We don't even have sideways action. We still have a pattern of lower highs and lower lows in here. So don't try to make money on stocks that are going down by being long. You want to short them, obviously. The shares of Tesla did lose some ground this week, and we spoke about the fact that last week it trapped people by getting above the declining 5-day moving average. This week we saw some weakness early on. It rallied up during the week to the declining 5-day moving average, and from there we saw a pattern of lower highs and lower lows. Here it is at a low for the year right now. I'm sorry, that's not true. Close to the lows for the year, and it still looks to me like it's got a good chance of heading down towards about $180 a share or so. This is stuff we talk about every single day on alphatrends.net. If you haven't taken a look, please do so, and hope you have a good weekend.